Welcome to Transformational Thursdays, and today we will be speaking about credit hacks. And in order to really get a real deep understanding and to have a certain level of respect for your superpower, which is credit, I want to provide you some basic fundamentals of credit and speak about provide foundational information regarding credit and how important it is to you for your lifestyle to acquire things and basically to even get a job, to secure a mortgage, to rent an apartment, to purchase a car. Credit really is a superpower when it comes to actually being a part, living, and achieving the American dream. So credit basically is, by definition, the ability of a customer to obtain goods and services before payment based on the trust that payment will be made in the future. So it's based on trust. Credit is, based on trust, and your credit score, which we'll be speaking about today, is really based on behavior. Credit reports are actually provided by three major credit bureaus. They're Equifax, Experian, and TransUnion. They are not governmental agencies. They are for-profit companies. They're corporations. They are, again, are not governmental agencies, and they have to abide by the Fair Credit Reporting Act as it relates to reporting information about your credit and your credit score and your credit profile. We'll talk a little bit about how the information is gathered. So the information is based on demographic information. It's based on your name, of course, your address, your city, your state that you've lived in the past maybe 5 to 7 years. It provides public information about past debts that you may have. It shares information about any inquiries that have been made regarding your credit. It also provides information, trade lines, balances, and payment histories to people that are inquiring about your credit. Your credit report can change your credit score, your high credit score, your low credit score, different score models. The three agencies, again, are Equifax, Experian, and TransUnion. And the score models that they use, Equifax uses the Beacon score, Experian uses the FICO score, TransUnion uses FICO Classic, and the credit score range is 300 to 850. If your credit score begins with 3, 4, 5, or 6, you will tend to be on the lower side, and credit scores of 700 to 850 are good to excellent. So that's where that's the range where we want you to stay. And for more information regarding your credit score, you can always go to www.myfico.com. Here are items that should not be on your credit report. It should not contain any information about race, your religion, your national origin, your gender, your marital status, your salary, your occupation, your title, your job tenure, loan interest rates that you receive for, loans, from anybody that you've sought to be banked with, cell phone payments, utility bills, and checking accounts. And in the past, rent payments weren't reported on your credit, but there's a new model out where we'll talk about it in another video, another segment, to talk about how rent payments can count towards your credit score to actually help to improve your credit score and show that you actually have a payment history in terms of rental histories. But not all inquiries will show up on your credit report. There is a difference between soft inquiries and hard inquiries. And harder inquiries are when you go out and seek a loan for an automobile, a home, or even any other credit cards. But soft inquiries are like when your bank checks up on your credit report, your behavior, just do a little soft little look and just kind of see what's going on, because they actually do those periodically. And your score, it does affect your life. It affects your livelihood. It affects your lifestyle. Basic bottom line. It is a huge factor. And when it's used correctly, it's a superpower. So, people that actually seek out information regarding your credit report would be landlords. It affects your employment. It affects the pricing on your insurance because it is taken into account when insurance do underwriting. They actually, look at your credit score and your behavior, and your interest rate and your insurance rate can actually, as well as your interest rate, could really be much higher based on your past credit behavior. And if someone just wants to offer you credit for any reason, they have every right to go pull your credit score. And that's really the only way that they can determine if you're a good fit for any products that they may have. Information on your credit score is non discriminatory. And the FICO score, of course, like I said, is the number one model. And I've already shared with you how the different credit bureaus use those scores, which scores they use. But how's your credit score calculated? And that's like the meat of this actual segment. How's your credit score calculated? Your payment history counts for 35%. The amount of money you owe counts for 30%. The length of your credit history accounts for 15%. New credit is 10%. And the types of credit, your credit mix, accounts for the other 10%. Your payment history, 35%. So imagine, this pie chart. 35%, that's a big chunk of a pie. That's a nice little slice. It includes all payment history for all of your debts. Timely payments raise your credit scores. Late delinquent payment, will sink a credit score. Amount of money that you owe on different accounts, it counts for 30%, the total amount owed. The number of accounts, the aggregate credit limits, and the number of credit lines used. So, say for example, this 30%, while it accounts as 30% of the pie, it also is a very significant number because when you have a limit on an account, say for a credit card, and you have a $1,000 limit, you want to keep your balance on that credit card at 30% or below. You don't want to trek anywhere near 31 to 99 to 100% of that credit card. You want to keep that credit card at 30% or below. So if you have $1,000 limit, your credit balance should not exceed $300 on that particular credit card. It should never exceed $300. Keep it at 300 or below. And so 30% is a good number. If you just take out all of your credit cards right now, all of your credit card statements, take a look at them, and the ones that are above 30% of the actual limit, those are the ones that you're going to want to kind of knock out first because those account for 30%, a huge chunk of that credit score pie. The length of credit history, 15%. That's how long you've had a credit card. Do not close old accounts. Keep them open as long as, just keep them open because if you have an open account and you don't owe anything on it, which you probably should, just to show that you have a good behavior and can handle credit. And, say for example, you have $1,000 open limit on a credit card and your limit is $1,000. You owe $10. That could really raise your credit score. It has a positive impact on your credit score. New credit, the number of new accounts or the number of new inquiries, that counts as 10%. And the final 10% is the type of credit you have, whether it's unsecured debt versus secured debt. So if you have a car, a mortgage, those loans are the types of credit, or if if it's a high risk debt or low risk debt. Different kinds of credit also includes retail cards, major credit cards that have the American Express, Visa, MasterCard, and Discover logo or emblem on them. And so, in closing, I want to talk a little bit about how your credit score actually affects, your lifestyle, whether it's going to help or hinder your lifestyle. So, say for example, you found a new car, that you just had to have in the car. When you get to the table, that car is $25,000, and your credit score, you're just cheesing because you have a credit score of 740 to 850. So you're going to get the best advertised interest rate for that car, because you have such a beautiful score. You got that good to excellent credit, that very good to excellent credit. So your $25,000 car for a 5-year lease term. You get the 6.25% in terms of the interest rate. So your car payment will be $486. But on the other hand, if you go into your credit score is 350 to 599 and you want to acquire, purchase this $25,000 car on the same 5-year lease term, you may end up with a 12.75% interest rate, and your car payment could be as high as $566 a month. That's an $80 difference between the 486 to the 566. That's an $80 difference per month. And in a year's time, that's a $960 difference. What could you do with $960 during that year? That could go towards your insurance. That could be for your fuel costs, for any maintenance that you're going to definitely need on that car. So I highly advise you to keep your credit score between 740 and 850, preferably at 850, because that's what I'm aiming for, at 850. I always aiming for the North Star. So another example, if you can, first time home buyer, you want to acquire a mortgage. Your credit score is 740 to 850, and you found a $200,000 house, and the typical mortgage, the term, lease term, loan term for a mortgage is 30-year fixed rate. You get a fixed rate of 6.5% because your credit score is good. You got the best advertised interest rate, which at the time is 6.5%. Your monthly payment will be $1265. But on the other hand, if your credit score is 340 to 599, you're considered a subprime, and so your interest rate, you may end up with the interest rate of 8.5%. Your monthly payment then goes up to $1,538. That's the difference between $273 a month and $3,276 a year. There's so much you could do with $3,276 within a year's time. That money could go towards furniture. That money could go towards utility bills. It really can help or hinder your lifestyle, your credit score. So please be mindful. Learn as much as you can. Be very, very engaged and invested in maintaining a credit score, optimizing your credit to get acquire the things that you really want. Optimize, your credit score. You optimize and maximize credit. Use it as leverage. I have clients that tell me, well, I've only operated in cash and I just prefer to do things with cash. Well, that's very noble and I can appreciate using cash, but when over time, you can use somebody else's money. That's what they call using other people's money when you acquire credit. In a capitalistic society, when you want to get to certain places and do certain things in life, having a positive credit profile and an a very good to excellent credit score can really help you to really, acquire the things you want and have a really, really good lifestyle. So thank you for joining, and I look forward to speaking with you. I look forward to taking any questions or concerns that you may have about credit. I look forward to working with you. You can follow me here, like, subscribe, and hit that bell so you can get updates on my posts, which will come on Sundays and Thursdays, and I may do a few lives in between. So let's keep up with each other, join the community. And I thank my gurus, I thank my gold diggers, I thank my girl bosses for being such an amazing posse, my village, my tribe, my squad, my girl gang. So, my girl and guy gang, because I got a lot of brothers that I work with. So thank you so much. Follow me on Instagram at the Pink Print CEO for updates and for giveaways and specials. And I look forward to seeing you next time. Bye bye.